Hey guys, this is Crypto with James talking to you today about crypto insurance, these gems, this space that has to grow as DeFi grows. It's an inevitability, and I want to talk about why I like them and the pitfalls with them. Before I get into that, I update the spreadsheet of the first 26 coins I spoke about on the channel. Had you invested $100 into each of these when I released the videos and you were still holding that crypto, you'd be in profit for like over 12 grand. This annoys me now because obviously we've been in a bear cycle, so now I see red where I didn't see red previously. Bar grin sucked for so long. But if you want to see the coins that I hold, come check out Copy My Crypto. One thing I have been reiterating for 6 months, probably longer, is building a list of coins that you're excited about is key. During a bear cycle, those coins will lose value if you're still excited about them. You've got opportunities to make really good profit. Like the profit you're making from a bear cycle is better than a bull cycle. And I've shown that in every single financial market going, whether it was the NASDAQ, the Dow Jones Industrial Average, gold, diamonds, housing, all of them. The consistency is bear cycle or recessions, everything's undervalued. And that's where the money's made. You've still got time. Bear cycles tend to last a reasonable amount of time. So you've got time to build that list of coins. And if you're still excited about them, then you might have a gem. If you don't have the time or the energy, you can come see the coins that I'm excited about on Copy My Crypto. Like I said, the link's in the description. So top insurance coins. The market cap for these is about $500 million combined. NXM takes up a lot, but the trading volume is piss poor. So there's a few here in NXM, Insure, DeFi, Insure Ace. I think Bridge Mutual is really undervalued as well, to be fair. Now, what's great about these are fundamentally it allows retail investors the opportunity to get coverage in case there's a hack or anything else. So as an example, I'll show you Insure DeFi. So say you have the value that you want insured is effectively 18k. You would require 80,000 insured or sure tokens. With that gives you coverage, 90% coverage for scammers, 80% for devaluations, and 65% for stolen funds. What is really good about this, and what's really good about insurance protocols in general, is actually a number of them work by voting. The majority work by the holders. When a claim is made, holders can then vote on the outcome of the claim. And I do feel that that is a far more trustworthy process than an insurance company. Any of us that have dealt with insurance companies over the course of time, they use as many opportunities to slither out of the agreement as possible. You know, if it's a car, if you're making a claim about a road accident, you know, they really try and avoid having a payout. Same with if your house is burgled, same with everything. Insurance companies are a faceless organization. And while you can't necessarily see the faces of the holders that are voting, I do feel that you're more likely to be compensated by a plethora of individuals who vote on what they believe is right, rather than an insurance company that try to maintain profit. And that, as a governance mechanism, as a voting mechanism, I feel is really, really positive. And retail investors, this is a way to effectively cover you in case anything goes wrong, because things do go wrong. You know, we've seen it recently. And with a lot of DeFi applications now, there are buttons integrated for insurance, whether it takes, and it's usually token specific, so it might take you to Insure Ace or Insure DeFi or Bridge or Unslashed Finance. Unslashed Finance is quite a popular one in terms of where I've seen it on DeFi applications. And this is a space that is inevitable that it will grow, because fundamentally decentralized finance will grow over time, because it affords an individual an opportunity to potentially earn some decent income outside of traditional finance opportunities. So DeFi will continue to grow. It will continue to evolve as we see more of these moments, whether it's UST or whether it's stuff like Ronin hack. As we see more of these things happen, more retail investors will go, you know what? I've got a couple grand here and I want to make sure, and I don't mind spending a couple $100 or however much it is to cover myself in case something goes horribly wrong. And retail investors, this is beautiful. Now, the pitfall here in terms of growth, I suppose, is I can't see massive companies or institutions utilizing crypto insurance. I can't see them going, we're going to get into crypto, and then to insure our crypto, we're going to use another crypto. And because of that, there's not necessarily going to be the surge in volume over time and the surge in appeal over time that is necessary. But another point, how many insurance companies right now, proper, like as in legit insurance companies, there's so many of them, how many of them are prepared to cover you and insure your money based on it being in a crypto DeFi application, whether it's a lending protocol or yield farming or whatever it is? How many of them out there are prepared to insure any company, hell, any individual? So probably zero. So if institutions, if big money, whales, whatever it is, if they want to start getting into DeFi, this might end up being the only avenue they can actually utilize, because fundamentally, they're not going to get the coverage that they want on any other, by any big insurance company. It's a really interesting one, because right now there's not a ton of insurance companies. There's a few, 27, but there's not tons, right? Some are stronger than others, some are newer than others, right? But it's worthwhile noting which ones are beginning to build partnerships or provide coverage for the bigger DeFi applications. Because right now that's probably one of the issues with some of these, is that they don't necessarily provide coverage on some of the biggest DeFi applications out there. But as a space, not enough people realize about this space. I know, because it's not sexy at all, and I'm well aware of that. People want yield, people want DeFi, people want Metaverse. No one wakes up in the morning and goes, I can't wait to get my insurance coverage. You know what I mean? And I'm well aware that it isn't the sexiest, it isn't the most intriguing, it isn't the most exciting. But what it is a necessity. Because there's an example with UST, right? There were insurance protocols on UST, but if you didn't, and I don't know if any of them have paid out yet. I don't know if you can get payouts based on what happened. I presume that anyone that got coverage for UST on the insurance side will get paid out. But if you didn't and you lost a lot, it's one of those moments where it's very possible down the line you're going to go, you know what, I'm happy. I want to put my money in DeFi. I want to put my money in a lending protocol or a borrowing protocol, but I am not doing that without coverage. And those moments that are terrible for individuals, they're terrible for the market in general because anyone that's unsure about crypto conflates issues. So, oh, I heard UST Terra collapsed, or I heard Bitcoin collapsed. No, you heard Terra collapsed. I heard crypto as a Ponzi scheme. No, you heard UST as a Ponzi. Like, people conflate the issues, and they're bad for the overall market. But those moments are good for insurance because it will open more and more people's eyes to the necessity for these protocols. And let's be honest, if you end up, or any individual ends up going, I've made, I put $1,000 in and I actually got 100 EXA. That 100 grand, I'm now putting into a DeFi protocol. You want coverage. You want coverage, because if that gets hacked, that's devastating to a lot of people. So it's one of those where, like I said, not sexy, not exciting, not what people get up in the morning, clap their hands together and go, I'm going to get me some insurance. No. People go, I'm going to make myself some money. I'm going to do a trade. I'm going to, no one's excited by insurance, but it's a growth sector that has to grow because we keep seeing these moments, whether it's a plethora of different algorithmic stablecoins that crash, whether it's a hack, whether it's a 51% attack, whatever it is, insurance protocols are designed to protect you. And this is a sector that has to grow over time. It just has to. Because DeFi will grow. So, yeah, interesting one. And I hope that sort of resonates with some people in terms of what I'm saying. Whether you agree or disagree, let me know in the comments. I always like to hear. Like the video, subscribe to the channel, hit the bell notification. But like the video and subscribe. That helps. You want to be a helper, right? You don't want to be one of those people that don't help. So help me. And yeah, that's it. Insurance, like I said, massive growth sector. And think about it, by the way, just from normal financial markets, insurance is one of the biggest sectors in the world in terms of the amount of money that's in it. Why won't that still be true? Why won't that resonate and translate to crypto? Of course it will. And if you guys are prepared for your bear cycle, fantastic, well done. If you've been building your list, continue reviewing that. Because make no mistake, during a bear cycle, 99% of cryptos, probably, well, certainly 94, anywhere up to 99%, but probably 94, 95% are going to disappear. So review the cryptos, review your list, make sure you're bullish still. If you are, you might have a gem. If you've not had the time, not had the energy, come to Copy My Crypto and you can see exactly which ones I'm looking at the moment. And that's it from me, guys. Take it easy. Bye-bye.